good things are happening for sure, Derek. And where we have to start is both the S&P 500 and the Dow Jones closing at all-time highs.
They did for, I think, the third or fourth week in a row. And not to mention the NASDAQ is within 1% of its all-time high as well. So a very strong market. It was a week where we saw every sector up. It wasn't just technology companies or energy stocks. It was also utilities, real estate, and the rest. So the market rally has broadened, and sentiment is starting to get a little bit frothy.
And one of the things that you can look at is the volatility index. And as it goes up, obviously the volatility is going up. And as it goes down, complacency comes in. We saw a 16 number on the VIX. That is lower than we've seen it before. You can probably assign a lot of that to just really good economic numbers. The retail sales report that we saw was really, really good.
Right. It was up 9.8% in March. Remember, we had a sort of a slow patch in February when the weather was really bad across the country, with revisions up 10.2% over versus the prior month, easily beating what the consensus estimate was, which was up 5.8. So retail sales now above the pre-COVID peak. Certainly certain areas of retail sales have done better than others. For example, apparel sales are really strong because a lot of apparel stores are actually closed last year.
Right. And so we saw that. And in the retail sales report, by the way, gun sales were up really a lot. In fact, I read a significant amount of gun sales were part of that retail sales report. The second thing that we saw was a really good weekless job claims, the lowest number we saw since the pandemic began.
Yeah, the job market is gradually improving. I think there are now about 8.5 million people unemployed, and that number is certain to fall in the coming months as more and more businesses reopen, as more and more people get vaccinated. So that's a positive. We also had a really strong housing starts number. We've recently added a housing play in our equity income strategy because we believe that's a long-lived acceleration because there's just not enough inventory, and some millennials are getting tired of living in their parents' basements.
And by the way, as we mentioned, there are more real estate agents in the United States than there are houses for sale. So certainly supply is down. And the last thing I want to point out is that mining and manufacturing is surging. And part of the mining number, of course, is crude oil and natural gas. But manufacturing is surging as well.
Manufacturing PMI was above 60, which is a very, very high number, as was the services PMI. So manufacturing managers are getting more and more optimistic about their business prospects. As a Fed governor said on Friday on CNBC, he said the economy is ready to rip.
Yeah, and that's for sure. And what we did see, and we talked about it, is the 60 Minutes report last week, Sunday, had Fed Chairman Jay Powell on, and he said, we think it's going to start to accelerate as well. So he did say that. At the same time, Derek, he said interest rates are expected to stay low, not only in 2021, but 2022 as well.
Yeah, and I think there's a subtle change with Fed policy. You know, Powell said it, Bullard also said it, and the fellow who spoke on Friday said it, and that we're supposed to focus on levels, not growth rates. So just because the economy is growing at an 8% rate in the first quarter, as expected by the Atlanta Fed, the thought is really we're not back to the levels we were pre-pandemic, and that's what the Fed's looking for. In addition, they're willing to let the inflation rate run north of their 2% target for a period of time in an asymmetric way that would also suggest that these rates are going to stay low for a long period of time. The key is, how does the bond market react to all this data?
And that's right. And so we're watching that very closely. We did see the 10-year Treasury end up about 1.59%. I know a lot of people were freaking out. Bond traders were freaking out as the 10-year got towards 2%, but leveling off right here is also a good sign as well. And no question, right now is the time to go and look in your portfolio, both on the fixed income side and on the equity side.